Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Monash. On today's show, we're looking at the efforts to disrupt the traditional real estate markets. British company Purple Bricks announced earlier this year that they were pulling out of the U.S. market. The company is one of several fixed-fee brokerage companies that have tried to penetrate and disrupt the traditional residential real estate brokerage industry. The heavy use of software combined with minimal services was supposed to lower the cost base for consumers. Purple Bricks charges homeowners a fixed fee for listing a property on the MLS, whether or not a property is sold. Purple Bricks tried to differentiate by offering exclusive territories to its agents based on zip code or postal code. Part of the argument in favor of fixed-price listing services is that in a hot market, when any property listed will sell, often over asking price, the listing agent isn't doing very much work to earn their commission. The buyer agent has to take their clients on multiple showings, draft multiple offers, the majority of which are rejected. It's the buyer agent that does all the heavy lifting. The listing agent just basically has to sit there and wait for the offers to roll in. Of course, in a market downturn, in a buyer's market, the roles are reversed. It's the selling agent that does all the heavy lifting, hosting multiple open houses, doing everything they can to generate interest in the property. In the traditional model, the seller pays the entire commission, which is split between the buyer agent and the seller agent. The fixed fee model charges a fixed fee for listing the property, and then the fee paid to the buyer agent is in addition to the fee paid for the listing. The traditional brokerage commission in the U.S. is 6% of the selling price. It's usually split half and half between the buyer and the seller agent. In Canada, the going rate for an MLS service is 5%. And in some hot Canadian markets like Toronto, the listing agents have fought back against the flat fee offerings by discounting the listing service. They still pay the full 2.5% commission to the buyer agent while discounting the sell side of the commission to either 1.5% or in some cases as low as 1%. Unlike the pure for sale by owner offerings, in order to comply with real estate laws in most states, a flat fee brokerage assigns a real estate agent for each listing. But in truth, there's very little involvement from the agents compared with the traditional model. If you want a realtor involved in the negotiations with the buyer, well, you can hire the agent to negotiate the sale for a fixed fee. If you want a comparable analysis or broker opinion of value, then you pay for that service separately. In the traditional model, these services are all bundled together in the sales commission. The flat fee broker's emphasis is squarely on the online component of home sales. The MLS listing is seen as the most important part of the sales process. And gaining access to the MLS system has been a closed process involving only licensed realtors. In Canada, for sale by owner websites routinely offer MLS listings for a fixed fee. Companies like Comfrey, Grapevine, Fizbo Real Estate, they were the established players in the Fizbo market. Comfrey started in 2009 and was doing a booming business. Yellow Pages purchased Comfrey in 2016 for $50 million, as it aimed to diversify its business from the shrinking phone book advertising business. It's been facing declining revenue for years after being overtaken by internet search. In 2018, Canada's Comfrey was purchased by UK-based Purple Bricks for $51 million. Under ownership of Yellow Pages, the company didn't experience a lot of growth, as evidenced by the fact that they only sold the business basically for what they paid for it only 2 years later. The shares of Purple Bricks, which is listed on the London Exchange, had plummeted amid a deteriorating market both at home in the UK and as expansion abroad deepened their losses. The news comes on the heels of the company announcing that it was pulling out of the Australian market in May, and at the same time, founder and CEO Michael Bruce stepped down. He was succeeded by Vic Darby, the company's chief operating officer. Purple Bricks company stock climbed after the online real estate agent said it was pulling out of the U.S. The company's shares had lost 75% of their value since venturing across the Atlantic to enter the U.S. market. The investment in the U.S. expansion was bleeding the company of its resources, and profitability was too far off in the future for both investors and the board to accept. The stock has since regained some value since the decision to focus on the more established UK and Canadian regions. Purple Bricks CEO said, "Significant opportunity to disrupt the U.S. market remains, but it would take substantially more management time and resources than the company is able to commit at this time." The UK-based company reported full-year operating loss of £34.1 million, about $42 million, much wider than the £16.8 million loss from a year before. According to the National Association of Realtors, flat fee transactions accounted for about 2% of home sales in the United States in 2018. Another California startup called Reali, that's spelled R-E-A-L-I, set up shop in San Francisco. They're offering a flat fee service just under $5,000. That's quite a bit more than Purple Bricks was charging. Paying the buyer's agent commission, if there is a buyer agent, would be on top of the flat fee. The problem, as I see it with discount brokerages, is that they assume a high volume of transactions in order to pay for the fixed overhead associated with their business. In a market downturn, when sales volumes drop, the cost of carrying the fixed overhead doesn't change, and we've seen many discount brokerages fail in market downturns, which is why they don't tend to survive, in my opinion. Despite the potential for software to disrupt the real estate market, I think we're going to be using the conventional real estate broker model for the vast majority of transactions for the foreseeable future. As you think about that, have an awesome rest of your day. Go make some great things happen. We'll talk to you again tomorrow.